everyone. My name is Sally Harrison. I'm the president of the Mesa Chamber of Commerce, and through Mesa Cares over the last few months, we've had lots of questions about PPP and now the return of PPP. So we thought, who better to ask than some of our favorite chamber members who work with us all the time, Lohman Company, and they were very instrumental in helping businesses with the first round. And so we asked them to come and talk about the return of PPP. So today we have Craig Lohman and Matt Hatfield, and they're going to do a presentation. So I'm going to turn it over to them now. If you could, please mute your mics and put your questions in the chat room, and we'll go ahead and get started. Thank you, gentlemen.
Great, thanks, Sally. Welcome, everybody. Good morning. Happy Wednesday morning to everybody. This is a real upbeat topic to talk about. Accounting and finance is always interesting for all business owners. So welcome to the return of PPP, what business owners need to know about changes to the payroll protection program. First off, an introduction to who we are. My name is Craig Lohman. I'm a partner with Lohman Company. Lohman Company is a CPA firm that is just celebrated 20 years, located in Mesa, Arizona. We serve businesses of all sizes and help them with their tax, accounting, compliance, as well as outsourcing of services for them. So my role, as you can see on the slide, is a variety of roles. I wear a lot of hats and also have been helping the chamber for many years as well. So then I'll let Matt introduce himself.
All right, thanks, Craig. My name is Matt Hatfield. I'm also a partner at Lohman Company. I joined just over a year ago, but have a long relationship with Lohman Company. Prior to Lohman Company, I led the Phoenix office of a large professional services firm that specialized in project-based professional services, which is the division that I lead at Lohman Company. I won't go into all my background, you can read it there. But my particular specialty is we help clients gain focus and momentum on their key initiatives by providing high quality accounting and finance professionals. Fun facts about me: I'm born and raised in Arizona and lived here my entire life. I love Arizona. I can't imagine living anywhere else. And in my spare time, I am a dedicated, maybe some people say should be committed cyclist, and an avid fly fisherman. So with that, I'll turn it back to you, Craig.
Excellent. Before we get into the presentation, I just wanted to say a quick thank you to the Mesa Chamber. A lot of you on the call today are probably chamber members. Some of you may not be. The Mesa Chamber is a fantastic organization that you should be a part of. Our business has been a part of it for about 7 or 8 years, I believe, and it's been extremely valuable to us. Sally Harrison, President and CEO, is fantastic and has lots of opportunities to do things. And a special thank you to Bob Nelson, who we all joke about, but he is the guy behind the scenes making this all happen. So thank you, Bob. All right. So to start with, the act that just got passed by the president on December 27th was actually part of a big act, had lots of different things in it. The title is really long, and it's one that you're never going to remember: the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venue Act. Some people call it the Economic Aid Act. It's got some significant changes that took place that changed the Paycheck Protection Program, and some of the things that you should note is one of the items that we were joking before we started, that we should easily be able to get through this in an hour, because there's only 5,000 plus pages in this act. So we're going to put it on double speed or triple speed and kind of run through this. Just kidding, we're not going to do that. We're going to hit the high points on that. A couple other things that what we're talking about today is likely to change. If there's one thing we've learned over the past 9 months, is that everything that comes out from the government is subject to change. Last year, when the CARES Act came out, there were multiple changes that happened to clarify and explain provisions that were made in the act. Some of that is a result of just the rapid speed that they had to do to try to put these benefits in place for businesses. So just keep your eye out for future changes by the SBA and the government if there are clarifications that come out. And then the other part is that this act was signed on the 27th of December. So they have they had 10 days to actually get a number of things in place. We've already had a couple of interim final rules that have come in place. We're still waiting for some information yet on forms, on the actual forgiveness form, I believe, et cetera. So we don't have all the answers at this point.
And an interim final rule is basically the SBA's method to communicate and clarify different provisions within the Act. So you'll probably hear us say IFR several times. That is exactly what that is, interim final rule. And Craig is exactly right. This document is 5,000, I think it's about 5,600 pages to be correct. About 300 or so deal with Paycheck Protection Program. There's a lot of other provisions in here. We're going to touch just briefly on some of those. By no means is this intended to be an exhaustive presentation. We just won't get through it all. And we're really focusing on the PPP, which you'll probably hear us refer to Paycheck Protection Program as PPP. That should save at least 30 minutes of time throughout this presentation of shortening that name. So I just want to make sure you guys know what we're talking about when we say PPP.
All right, on with the show. So one of the biggest things that came out of this act for businesses is something that is extremely important. The Paycheck Protection Program, for those of you who received the PPP loan from the first round that went about, there was provision in there that said that the monies you received would not be taxable, which is true. The problem was that they did not describe until much later when the IRS came out and explained that the expenses used, the monies you paid for expenses from PPP loan funds would be not deductible, is what they decided. And so what that really meant was these monies ended up being taxable to you and your business. That was a big challenge. We in our firm and a lot of CPA firms around the country were writing letters to our various people that we could, including the American Institute of CPAs, to try to get that turned over. And on December 27th, part of this act was a change to say that those expenses are deductible. So that's a huge thing. Had it not been in place, I think that was the way most business owners were running their businesses, assuming it was going to be deductible, that they were not going to get taxed on it. They assumed the monies were going to be used for employee payroll, and they kept people on for that purpose. And without this change, it would have been detrimental to many, many businesses around the country.
Yeah, just for an example, if you had a $100,000 PPP loan and you weren't able to deduct the expenses using an effective tax rate of 40%, you would have, as a business owner, had to pay the government $40,000 in taxes in 2021. So that would have effectively reduced the amount of your PPP funds that you could use for your business by $40,000. An interesting point on this is, as late as the week before Thanksgiving, Treasury came out and actually further stated their case that they were not going to allow these expenses to be deducted, and they did it in a pretty emphatic way. And so you may have seen some communication out there as late November talking about that. So this was a really big deal for Congress to overturn Treasury's decisions and their position.
Yeah. So another thing that happened with this act was that the PPP loan program has been reopened and it's been expanded. So organizations that did not get a first draw on the first round of CARES money that came out for the PPP loan are now able to apply for a loan. Those who actually received the first loan and were able to use the funds for purposes and are still having some challenges are able to apply for a second round. So
yeah, and you might say, why do people not get the first round? Well, the banks ran out of funds. Some banks were not as efficient in processing those. And some companies that I've been working with, frankly, they didn't even know that they didn't get the original PPP loans. They got something called an EIDL grant and an EIDL loan, which is definitely different than the PPP. So if you're kind of in a boat where you don't know if you got the first round of PPP, I would absolutely go back and check and make sure that you did, and you would know that by if you have a bank note or a bank loan agreement. If you don't have that, you did not get your first round of PPP, and you would be eligible for this first round again.
So let's talk a little bit about what's involved with the requirements on getting these loans. So the first round PPP loan requirements were for companies that had 500 or less employees. They could receive up to $10 million. The calculation was based on 2.5 times the average monthly payroll in 2019, or the immediate 12 months prior to the application. What is now added in this new act that was done is the 501c6 organizations, like the chamber, are now actually able to apply for the PPP program. They were initially excluded from that, so that's fantastic news for those organizations like that. And then one other thing, another item that came to play on this is, if borrowers didn't receive the full amount in the first round, they could actually apply for an increase as long as they have not applied for forgiveness yet. So there's a few things that came out that clarified and how you could calculate what was allowable expenses and able to get the amounts you needed. And in the initial round, I know there were some companies that were leery about what they should do or shouldn't do, and not really sure how the COVID scenario was going to play out and how much of an impact it might have had. And back in March, it may not have thought it was going to last until today. And so there may be those businesses that haven't yet applied for forgiveness may be able to ask for more money.
Exactly. Yep. Do we want to move on to the?
Yeah, I think one of the last bullet point on here that we do want to touch on was on the eligible expenses, right, Matt?
Yes.
So some of the things that they've changed or clarified in here is that eligible expenses for PPP loan forgiveness, they've defined better for all of us and added additional things. So things now that are included that'll be allowed for forgiveness would include operations expenditures, things such as software, cloud computing, HR, accounting needs. Those type of things would be allowed to be included along with your payroll and rent and utilities that were there before. It also allowed for, if a business had additional expenditures to comply or help their business stay open during COVID, to help with the various installs of materials or
dividers or moving, expanding outdoor dining, expanding outdoor capacities, that type of thing. Those expenses would also be allowed in your forgiveness application under that 40% category. Just kind of a 30-second reminder. In order to receive full forgiveness of PPP funds, organizations need to spend the funds 60% on payroll and payroll-related expenses and 40% on other types of expenses, rent, utilities, some of these additional expanded expenses that Craig just mentioned, that 40% bucket. So those expenses would be to retrofit or businesses would be in that other 40% bucket.
Yeah, and I just saw a question pop in. I don't know if you saw that there.
I was going to hit, we have two questions. One is, I think we'll hit a little bit in kind of the second draw request. The question is, are organizations that receive modest PPP round one eligible, and is this included in Save the Stages relief? So there's about 2 or 3 different topics in that one particular question. Yes, organizations would be eligible for second draw, and we'll talk about second draw in a minute if they qualify for second draw funds. There's also something that I think we'll talk about at the very end. There's different grants that are available, again, not part of PPP, and this is kind of venturing out into the fringes of kind of this presentation, but we do have some knowledge of that, and there are grants, and my understanding, just on a cursory review, is you can't take advantage of those grants on the Save the Stages relief, if that's what it's called, which that's kind of the first time I've heard that, but I understand what it's talking about, that you can't get a second draw PPP loan and take the grants. So I would advise on that one to go dive into specific. You can actually Google this. There's a couple of really good websites that talk about the specific performing artists and performing art venues of relief specifically for them. Another question that came across is Wells Fargo eligible to participate this time around? They were eligible to participate the first time around, they just had limited capacity. I will tell you that there has been a big push by the SBA well, let me back up. All the banks that were eligible the first time around are eligible this time around. But I believe there's a push to community lenders and even online lenders to get more business, if you will, to make more loans than they did the first time around. For example, opened Monday, where the community lenders, their window for second draw was actually opened on Monday. And those are community-based lenders. And so the government designated certain pools of money specifically for them. So I would, if you're having challenges with your bank, being able to accept applications, you can reach out to Craig or I, and we have some other avenues that you might be able to go to and be able to get those applications in and get your funding more quickly. You have something to add on that?
Yeah, the community lenders, I think, is an important thing. That was in this act. There was some discussion of trying to make sure that monies in the first round. There was a lot of concern that the big banks got all the money, and so the not that they're bad banks, it just they happen to have the biggest force to be able to get in there, and they distributed a lot of PPP loan money to large organizations. And so this act, they really were trying to focus in on trying to get these smaller organizations first, and they're basically allowing for community lenders to get out to those smaller businesses, to those that they may be minority owned. They're trying to really focus on getting those folks the support they need that may not have gotten it the first round. And so it is, and then they're going to allow the larger banks to come in after a period of time, and it's not a real long period of time. So I don't think anybody needs to be concerned that the money is going to go away and from the community lender side.
I think that's correct. And I think we're going to not have, I think there's going to be a lot of borrowers that will take advantage of this, but I think that the size of the loans are going to be significantly smaller on the second draw, and actually this leads in nicely to our next topic, which is the second draw, because there are certain requirements that employers have to abide by or qualify for in order to get that second draw. And then second draw is the terminology that they use in the act. So first draw or first loan was 500 organizations 500 or less. So they've now moved that to 300 or less. All right. So it's actually significantly smaller companies. And here's the big one. Organizations must demonstrate a decrease in gross receipts of at least 25% in any one quarter, calendar year quarter, that is, of 2020 when compared to 2019. So you say, well, what are gross receipts? We've I would say struggled with that, but we did a lot of research on gross receipts. And even in the IFR, it says it intentionally do not define gross receipts, but go look at the CFR, which is basically the SBA's Bible, about what gross receipts are. Long and short of it is, I went and I looked at that passage in the CFR, and it's basically how you pay taxes. So if you're a cash basis taxpayer, it's your gross receipts on a calendar quarter basis, cash received. If you're a accrual basis taxpayer, then it's your revenue, your accrual basis revenue, quarter over quarter. So that's the first qualifier.
I just want to, this is still a gray area, I will say. Yeah. And there's been discussion to say, well, what if we change tax periods in this year, right? Mm-hmm. And so I'm guessing we'll have some more clarification coming out, what's allowed, but at the moment we're recommending everybody for this calculation to be looking at whatever their tax basis was. So accrual or cash, whatever's on the tax return.
Exactly. I think that's where you have to start. And if you are not a calendar year end and you are on calendar, or you're not on calendar quarters, I believe the way this is written, it has to be calendar quarter. So you can't take your financial statements and say, oh, I'm a May 31st year end, so my quarters are different than calendar. I believe everything that I've read, it's calendar quarter. All right. So that's a hurdle. So that's one reason why I think that we're going to see probably a lot of small loans, because this is probably going to be restaurants that were shut down significantly, maybe independently owned gyms or smaller gyms, anything that was really shut down that is probably on the smaller scale. So I think there will be plenty of funds available. But I always encourage people in businesses to apply early as you possibly can once you determine if you qualify. So the other thing is the loans, again, first round was up to $10 million. Now the maximum is $2 million. Again, that kind of goes to where this act was trying to hit, was the smaller, hardest hit businesses. It's basically the same calculation of what your loan amount is. It's 2.5 times the average monthly payroll in 2019, which is what round one was based on. Or they allow you the immediate 12 months prior to completing the application for second draw. I can't imagine a scenario where 2020 average monthly payroll would be higher than 2019, but they gave you that option. Here's one thing that they did that was really nice for organizations. When you file your tax return, there's this NAICS code that's right on your tax return. And for organizations that file with codes beginning 72, and we actually have a slide that will, you want to go to that?
I'll do that right now.
Thank you. All right, we'll go forward and back. Forward and back. There we go. Perfect. So this is just a list of the codes that companies can file under 72. And what you'll see that there's a lot of food service in here. There's hotel accommodations. These are really hard to hit industries. And so what they say you can do your maximum loan amount, again, subject to $2 million cap, but it's 3.5 times your average monthly payroll. So I called it bonus. That language is not in the act. I called it a 3.5 times bonus because again, if you're not under 72, you can get a 2.5 times your average monthly payroll, which was equivalent to the first PPP loan, the round one loan. This is actually 3.5 times. So it is really trying to get money to the hardest hit industries.
We'll go back here then.
Perfect. Organizations must have received a round one PPP loan and used or will use all the funds prior to the disbursement of second draw. If you don't have that, if you don't have the first round, go back and apply for the first round. It's actually easier to qualify for your round one. And then, as Craig had mentioned, just like in round one changes, they clarified and expanded the definition of eligible expenses.
So wow, that's a lot, right?
Oh my gosh, that's a lot. Yeah.
That's a lot. So just to kind of talk what this looks like, a lot of companies got their first round of PPP loans, right? And they may or may not. A lot of companies probably still haven't applied for forgiveness out there. Some have, but a lot have not. This second draw. So let's talk. What does that really mean? So if I'm a company, and I had if I was a cash basis company, and if I'm looking at one of the criteria is gross receipts less than 25% in a quarter in 2020. Well, the COVID scenario didn't hit until March, right? And so late March. So likely the first quarter is not going to be, unless you happen to have a business that was seasonal or something was going on, but probably not a big change for the prior year.
Right.
The second quarter, if they're cash basis, they may be collecting cash in, right? So
right.
Their revenues might actually be equal again.
Because they might have some receivables that were being collected from a good quarter one.
Right. Yep. So really you're looking at the last 2 quarters, right? Basically, or the whole year as a total. Right.
Yeah. That's a really good point, which you just made in the whole year as a total, because what they did is for companies who don't have a good accounting of their quarterly gross receipts, they did allow for businesses to use gross receipts on their 2019 tax return versus gross receipts on their 2020 tax return. I don't know a single person who's done their 2020 tax return. What I've seen advising is go calculate what your gross receipts are for 2020, even if you don't have your tax return done. But again, that's going to be between you and your lender. But that would be a place to start. But I would say, the best case scenario is look for your quarter, go back and try and figure out your quarterly gross receipts. And all you need to do is hit it in one quarter, any one quarter in 2020 over 2019, and you're eligible.
So let me ask you another question then. So I've had a loan, first round PPP loan.
Yep.
I have not applied for forgiveness yet. Can I apply for round 2?
Yes, you can. That is a great question. That's a really good question, actually. You just have to have already used your round 1 funds. In fact, we've been advising don't apply for forgiveness yet, and there's some reasons why. One of those reasons is in round 2, these expanded definitions of expenses. You can actually now, if this definition was in place back in early round 1, you could have actually gotten more money. All right, you could have got a bigger loan. What this act allows you to do is actually go back and recoup those monies, if you will, get a bigger loan, if you haven't filed for forgiveness. If you filed for forgiveness already, you can't go back and do that. So I have a question here, and we'll kind of address it again. Is it calendar quarters, or can be any 3 months in consecutive months? The law clearly states calendar quarter. It is quarter, so it can't be here's March, April, or March, April, May, or April, May, June. It really has to be a calendar quarter. So 3/31, 6/30, 9/30, or 12/31. That is a good question. I have had that question before, and again, everything in the law states that it has to be a calendar quarter, quarter over quarter.
Great. I don't think we any other questions.
I think
we have one more question in there.
Did I miss one?
Well, we're on the topic.
Second draw PPP. Can I use my $250? You got it?
Yeah, there we go. I did. Yeah, that did. It got kind of bumped up there. Someone was talking about a particular type of insurance. Can it be used in
As payroll costs?
As payroll costs. I would have to go back and look and see exactly what is in that expanded definition. And I don't know if you guys have the ability to go back out and we can clarify that, because they do specifically state what those insurances are when they define that. I just don't have that off at the top of my head on that specific, but that is a good question and we can get an answer to that.
Yeah. Bob will help us with that, I'm sure. All right. Let's continue forward. So one of the things that was in the initial PPP loans when you applied for it was that there was something called the covered period, and that was the period of expenses that were going to be allowed to be used for forgiveness. And originally it was an 8-week period is when it first came out, and then there was again talking about changes in the law and then they came out and said, well, it could be 24 weeks,
8 or 24.
8 or 24.
Yeah.
Now this act has changed it to say you can choose any period of time between 8 and 24, right?
Correct. That's a big deal because when you file for your loan forgiveness, which we've done several of these applications, you have to account for certain employment level, I call it FTE level, full-time equivalent level, all the way through the end of your covered period. So 24 weeks pretty much meant if you want full forgiveness, you had to keep all of your employment base intact through the end of that 24 weeks. Now what it says is you can basically choose anywhere between that 8 to 24 weeks to determine where you want to cut off your covered period. You say, I've spent all my funds the way I need to, and basically I can now file for full forgiveness. So that was really the reason why they allowed for that flexibility, is so you didn't have to maintain a workforce all the way through that 24-week period. And maybe it just wasn't right for your business, had nothing to do with COVID, but it just, you're seasonal or what have you, and you typically drop employment at that particular time of year. You didn't have that option before. Now you do.
Great. Question?
I'm looking at right here. So why don't you go ahead and I'll read the questions. And
all right, we'll move to the next slide here. So one of the things that we as our firm has been recommending to wait on forgiveness applications. Initially there was one application that was set up that allowed for forgiveness, and then they allowed for a little bit simpler for under $50,000 loans. And we kept advising to wait because we had heard through the rumbles all throughout that there may be some changes. And again, December 27th, there were changes made. There will be a simplified forgiveness application for any loan under $150,000. And that simplified application is really going to be much different than what we've seen before. It's going to be a one-page document. It will have the borrower submitting the lender a certification that they in fact had used the funds for their specified purposes. They would have to identify the number of the employees covered still. They would also have to attest that they've complied with the program, but there would be no submittal of data to your bank that you got the PPP loan from. And so that's significantly different than what the first round or how the forgiveness application was set up for those that are now under $150,000. That doesn't mean you don't need to go through the motions still, right? Because these loans from the government, from the SBA, are subject to audit. Any one of these loans, whether you have a $10,000 loan or a $3 million loan, any one of those are going to be subject to audit. And so they're still recommending that you maintain all the data related to these loans that you've received under the PPP program, and make sure that you have your everything kind of documented and in place so that should an audit come up, you're not going to be at risk of having that loan forgiveness basically pulled back from you.
Yeah, I think that's a great way to explain it, Craig. Honestly, I was a little bit disappointed in how this language came out under the simplified forgiveness. We in the industry were all thinking that it would be an automatic forgiveness feature under 150,000. The reason why is because Mnuchin, Treasury Secretary, came out and said he was in favor of it. I believe it's something like 86% of all PPP loans in round one were under $150,000. And so what they would be able to do is basically automatically forgive those and focus on the biggest ones, right, to make sure that there's compliance. There is an S form for small under $50,000, and it did basically that. It was a very almost automated forgiveness feature. So we're really talking between 50 and 150, and we thought they were just going to apply that up to the 150,000. They didn't. They basically still made all borrowers do all the attestations. As Craig mentioned, I would go, if it was me, I would go through the motions and I would do the calculations to prove to myself and to any potential auditors, because they will be audited, that they could be audited, not will be. They have an audit provision in there that you sign your attestations validly, if you will, that you basically can certify and have the backing and the support to make sure that you comply to basically get that forgiveness. So it didn't go as far as we wanted, and so I would highly recommend that you go through the steps under the old easy form that they had out there. Couple of questions.
Yeah, a couple of questions.
Yeah, do you want to hit those, Craig?
I'm just was glancing at here. So
I can hit one quickly. It's really, basically, it says if you had the first round, is this treated as as one or two separate loans? It is two separate loans, and you can get second draw from a different lender. You will have two bank notes. It is definitely two different loans.
the one about new business. My business started November 1.
Yeah,
There
are some provisions in there for that.
I don't think we've addressed that in our presentation today.
Right.
But there are some provisions in there for new businesses, and they lay out specifically what you can or can't do for those new businesses and how you would calculate whatever that might be.
Right, and I think it's somewhere around February of 20. I just remember that date sticking in my mind, but that's something that we would have to get an answer for you as well. Again, this bill is so detailed to get down into some of these specifics, and it's a really good question. And I know it's very specific to your situation, but we would have to get that answer for you.
Question on eligible expenses. Would equipment going virtual, cameras or internet needs to be included? I think under the new, under that new criteria that we just talked about earlier, let me find my note tab here. So they included, I don't know if they spoke specifically to virtual equipment. They talk about cloud computing, they talk about software, they talk about human resources and accounting needs. Specific equipment for cameras or like
because that's right.
It's a gray area, right?
It's a gray area because those are assets, fixed assets. That, I mean,
it may or may not be. I can't say for certain on that.
Right. I would agree with that. I think that's a gray area. Yep.
Do we have one other up there?
That's me.
Are you okay? All right. We will move along.
Yeah, we got a little.
We are coming. Time is running quickly here.
This is a quick one. So I mentioned earlier in this presentation idle loans and idle advances. Idle loans and advances were applied for directly with the SBA, and typically the way it worked, not always, because I've talked to many companies, it did not work this way. You apply for an idle loan, and immediately within just a few days, you would get an advance, and it was typically up to $10,000. That changed a little bit over the time. It was $2,000 per employee, and then $1,000 employee. But typically, you would get about a $10,000, sometimes exactly $10,000 advance, and then 3 or 4 weeks later, you would get your loan, if you will, that needs to be repaid. The advances what they required you to do on PPP loan forgiveness applications is actually subtract the advance that you got from your forgiveness amount. So if you got a $100,000 PPP loan, you qualified for full forgiveness of the $100,000 based on how you spent your PPP funds. You would basically, and you got a $10,000 idle advance, you would subtract the $10,000 from the $100,000 and you would owe $10,000 back to the government. Plus you would owe for your idle loan. This bill basically changed that. You don't need to do anything with that idle advance anymore. And it's not taxable to the organizations, keeping in line with the change in taxability of these transactions.
Yeah, so those of you, again, there has been some, I know we've had, with the Mesa Cares program, we were working with a number of businesses in the city of Mesa, trying to give some advice. And, you know, the EIDL loan is a loan that came directly from the SBA. It's not one that got through a bank. And those monies just showed up in your account, basically. So
yep.
The grant portion of that, which was $1,000 per employee, up to 10 employees, basically.
Yep.
So this is a benefit. It helps clarify a little bit on what's forgivable. We don't have to do a back calculation on it. And so it's a positive for everybody.
Right. And I have a question. Is idle still based on number of employees? So that's a really good point. Again, a little bit outside the PPP stuff, because idle is a different program, but they did reload the idle advance and idle loan program. I believe it's still based on employees. I believe it's still up to $10,000. But that would be, we'd have to go back and research that again, because it's a different program, but I do know it was reloaded.
Yeah. So. All right. Another item that happened is the expansion of employee retention credit and how it affects the loan forgiveness application.
Well, this pretty much takes us to the end of about 8 hours we can spend on this one particular topic. So there are so many rabbit holes we can go down that actually companies need to go down on this, but know that this was a huge change in the 1227 Act, a very big change, and it can and very will affect your business that you need to be aware of. So Greg, do you want me to tackle this one?
Why don't you tackle? So originally the employee retention credit, if you got a PPP loan, you could not get the employee retention credit, right?
And that's actually why pretty much most people ignored the
right.
ERTC, because it was much more lucrative. You got more money from the PPP loan than you did from the ERTC.
So historically, people would just kind of ignore this.
Mm-hmm.
They got the PPP loan, they said that's not going to apply. With this act that has been placed now, this now is turned back on, and in fact, they've decided to add another portion to it, right?
Correct.
So let's walk through this, Matt. Why don't you try to address this as best we can? It is extremely confusing, and as Matt said, there are lots of rabbit holes you can go down, but it is something that every business should look at if they fit the categories.
Correct, and that's before I even start. My recommendation to you is to go back and do the calculations to see if you qualify. If you qualify, then you'll have to start going down some rabbit holes, because it can and will affect your PPP loan forgiveness. So as Craig mentioned, this change was retroed back to 2020. So now you can have both a PPP loan and you can have take advantage of ERTC. So let's talk about the 2020 Employee Retention Tax Credit. From now on, I'm going to just call it ERTC. In order to qualify for ERTC, you need to, well, first of all, what the credit is, it's 50% of the first 10,000 wages up to $5,000 per employee, all right? And in order to qualify for the 2020 ERTC, you need to show a 50% reduction in a calendar quarter, again, back to our calendar quarters, 2020 compared to 2019. When you hit that, when you show a 50% reduction, that's the start of you being able to calculate qualified wages for the ERTC. All right, that's that $10,000 in wages. Once you recover up to, and I believe it's up to 80% of your gross receipts, that's when the calculation of eligible wages stops. Okay, so that's ERTC in its original form. And you can actually go back and recoup those monies. And how this is done, it's actually done on your payroll taxes. Your payroll company will know about this, but they won't know if and when you hit the qualification to be able to start the clock on eligible wages. All right, so that's the first thing. The second ERTC program is in a 2021 program, which is a much bigger dollar amount to organizations and a lower threshold. And in order to qualify for the 2021 ERTC, again, this is where I'm talking about, you need to do your calculations. You need to show a 20% reduction in quarterly gross receipts in 2021. So your first measurement period is going to be March 31st of 2021, and compare that to the quarter back in 19. So you basically compare it not to 20, but you go all the way back to 19, which I think is a huge benefit to organizations, because they're not even requiring you to go to what happened in 20. They're going back to way before the pandemic ever even started. And then the other thing they did is it's not 50% of the 10,000 wages, it's now 70%. So it's up to $7,000 per quarter. And this ends in June 30th. So it's 2 quarters worth. So you can get up to $14,000 per employee in 2021 versus, again, going back in the 2020, you can only get $5,000 per. I'm going to take a breath because there's a big,
that was a lot.
I know.
So this is, we can't say this enough. This is a big deal. If your business has had reduced revenue in 2020 or 2021, 50%, if it was reduced by 50% or more in any quarter in 2020 compared to 19, or 20% in this right now, 2021 compared to 2019, there's dollars available to the business for credits, tax credits that'll come right back to the business. And that's, as Matt said, these are significant dollars that could come back and help you with your business. So it's not easy. This is a calculation that's going to need to be done by your business. The actual execution, like Matt said, will be done by the payroll company that you're probably working with. Mm-hmm. If you're doing your own payroll, I would recommend you get a payroll company, because these are not simple things that are going to be running through the payroll tax credits and how to apply them, make sure they hit properly. So.
Yeah, and I'm going to hit a few questions, but before I do that, I don't want to leave this topic because this is what's really important. The same wages that you're using for your PPP loan forgiveness application, and that's actually why we're talking about this. Other than the ERTC is a big benefit, but this does affect your PPP loan forgiveness. You can't use the same wages, okay? So you remember I mentioned you have to have 60% of your PPP loan funds in order to get forgiveness. 60% have to be spent on wages. You can't wages or wage-related expenses. You can't use those same funds to go and get the if it's 2020, the $10,000 up to $10,000 of wages to get your ERTC. Likewise, in 2021, most likely at this point, second draw, you can't use those wages for ERTC in 2021. So the first thing you need to do is you need to do your quarterly calculations of gross receipts and see where you actually qualify. What period do you start the clock on your wages? Then you determine how does that cross over with my PPP loan forgiveness wages, okay? And I know that's a lot. So one question I have is ERTC, can this be used if I'm the only employee of my company? I believe if you can demonstrate the reduction in gross receipts, I believe it can. I believe so. I can't be sure of that, but I believe so. If you're able to get PPP funds and whatever else, I believe you can use that. Craig, would you?
I would agree with that. Okay. I think that's true.
Yeah. I had a question. There was something on EIDL. Can we get EIDL for this year? Someone mentioned, is EIDL loan forgivable? EIDL loans have never been forgivable. EIDL advances are forgiven, and they don't have to be included in your loan forgiveness application. EIDL loans are just that. They will never be forgiven, and they're not under this act, and they weren't under the original one. Can you get a new EIDL loan? I don't think so. I don't think you can get multiple EIDL loans. I think we hit most of those, and I know there's a lot, and I apologize, guys. There's just so much, and as you can see, these questions and going through this, and they're all valid questions. But as we mentioned, this is a long river or very wide river, I guess we'll call it, of information.
Bob, any other thing that you see in there?
Nope, you're still very good.
Okay. So that kind of we were really focusing this presentation on the PPP loan and what's happened in the second round, and how that impacts. We obviously touched on the employee retention tax credit because it touches the PPP loan. There are a couple other things. Well, there's lots of other things. There's 5,600 pages, right?
Yeah.
So we could go on for all day long talking about everything in here, but there are a couple of different things that we just want to touch on that are important to business owners and that are not PPP related. So one of the things that came out of this act is business meals deduction. So normally business meals deductions are a 50% deduction for businesses. They changed that for 2021 and 2022 to allow business meals deductions to be 100% deductible for any food and beverages provided by a restaurant. So that's big news for businesses. I think it goes forward. The rationale behind that is they're trying to get people back into business and trying to focus on how they can help businesses do that. But it is a short period. It's just for this year and next year.
Yeah.
At the moment, that's which everything's obviously subject to change. But that's where that is right now. And then the other item that we're just going to touch on, I believe we might have a few people on the call that are in the arts industry. There have been some special grants that are included in this act that really are trying to help out the live venue operators, promoters, theatrical producers, live performing arts organization operators, museums, motion picture theater operators, and talent representatives. So you can see on the screen there that if you've had, and all of those organizations have probably been hit, it's probably not hard to show a 25% reduction in revenue given what's going on in COVID, but they do have grants available for those, and they have special amounts for those that are of smaller size for that. And they are part of this act. It's not really what we weren't really focusing on this presentation, but we did want to bring it up. They are things that would be going directly to the government as well. It's not going to be going through a bank or a lending association.
Yeah, it's through my understanding is it's through the SBA. You go on SBA's website and they'll have kind of the qualifications. There is a list of a lot of qualifications there. And these are grants. These are not loans. And they prioritize based on the revenue drop, my understanding is. One thing that I saw quickly, and I believe this is the case, in order to get these, you had to have taken advantage of round 1 PPP loan, and 2, you can't take advantage of second draw PPP loan. Those are the two things, again, very, very quickly scanning a couple of sources last night and this morning. That's what I saw, but the SBA website is where you want to go to get all that information, and I believe that's where you apply, and that's where your funding will come from.
Yeah, and that website for everybody, it's www.sba.gov. It's very straightforward. They have right on the main page a whole area on COVID relief, and you can click through and be able to see all the different options that are out there.
Yep.
I think.
Wow. How did we do that?
Wow.
I don't know how we did that.
We're at a few minutes before the end of the session that we had scheduled here. There was a lot of information that we threw at you. Please feel free to send in any other questions you have right at the moment. Otherwise, I did see that Bob had offered to take some questions so we can follow up in the future as well and get back to everybody.
Either we put everyone to sleep or we answered all the questions adequately, which I'm going to go with put everyone to sleep. So
yeah, it's exciting content on a Wednesday morning early.
Yeah, you're really living
lots of great information, you guys.
Putting the accountants on 8 o'clock in the morning.
Right.
In the middle of the
Thanks,
week,
Bob.
so,
That was you,
yeah.
right?
Anyone have any questions? I believe Bob has put some information up that we will have kind of an ongoing blog relating to this. We will have this information from this recording posted probably later today or tomorrow. So if you need to refer back to it or want to share it with others, feel free to do that.
Yeah, just to follow up to everybody, this is confusing stuff. Matt and myself have been heavily involved with this since this started happening in March. Every time we see new releases come out, we dive into those things. It's not easy for a business owner to figure out what's going on. And I know when we were helping out with the Mesa Cares program with a number of businesses, a lot of people don't really know what they actually got. Some people had received EIDL loans, EIDL loans, and thought they were PPP loans because, well, why not, right? It's what everybody's talking about. So these things are complicated. If you have a trusted source, I would highly recommend talking to them on whether it's your accountant, your CPA, your tax advisor, somebody that you could, another business owner, just to try to get information. The other thing I want to state is that every business is unique. Every business has unique situations. You saw a little bit on the questions that came up today. Everybody's got a situation and it's always unique, and it's not always a simple answer that we can answer right away.
Right.
Yeah.
Yeah, and I was also going to add on the complexity of this is there are a lot of organizations and companies out there trying to clarify, and you know we've seen inaccurate information. So what I would recommend is look at multiple sources. I mean, that's what we do, right? I mean, it's like we're going to look at multiple sources, say, hey, because there's room for interpretation. Did it really say this? And oh, I see how they're reading that. So just caution on all the sources out there. People are trying to get their interpretations out so quickly that sometimes they might miss it. And so just be careful when looking at that, especially when filing for loan forgiveness and some of those types of things. You just want to make sure that you know that you're watching your step on that one. So
yeah, and I think, and then what to look out for in the near future, the loan forgiveness application that's going to be should be coming out very soon.
24 days from 12/27, they had to get that to us.
So it will be coming out very soon. As soon as that comes out, I'm assuming a lot of your bank and financial institutions you've worked with are probably going to be pushing that out, because a lot of people have loans under that 150,000. And again, you don't want to miss that. That's great value to you because it's likely to be forgiven, which means it's really helped your business during this tough time.
Yep.
With that, I think we are good. Thank you, everyone. Thank you for your time and attention. We wish you well and stay safe and healthy out there in 2021. And remember to stay in touch with the Mesa Chamber. They are a fantastic organization to keep you involved in the community. So
that is our goal, Craig. All right. All right. Well, thank you everyone for coming on the call. We appreciate your time, and Lohman Company, thank you for your expertise. And we know that if there's any changes, we'll hear from you and we can do this again and share that information out. Thank you.
Thank you all.
Bye-bye.